Hey there, how's it going? Today I'm going to talk to you a little bit about credit history, and how important that is when applying for a mortgage and the different type of mortgages there are. So please stick around right after this and we'll get into it. All right, well, welcome back. Hey, today I want to talk to you a bit about credit, and we're going to do it pretty fast. But I'm going to talk about credit score, but not just credit score, about credit history. If you're looking to, apply for a mortgage and purchase a home, you're going to have to understand some very important things about your credit history. And one of those is not just about the score; it's also about the credit history. Behind me, you see a soccer field. I chose soccer today because soccer is a really fun game. I like it a lot. My boys and I, we play a lot of soccer, and actually coach younger kids soccer, you 14, you 13, you 15. We have a lot of fun doing it. But just like all sports, you can see the lines on the field behind me. Those lines designate boundaries and rules, and there's refs that are there to make sure the rules are enforced. Just like rules in sports, there's rules with your credit and the history on your credit report. In order for you to obtain a mortgage and get approved, you're going to want to understand the basic rules of credit history and what you need to do right now to prepare yourself to be approved for a home loan. So first off, let me just talk a little bit about credit score. Credit score is important. The proper score will help you qualify for a mortgage. It's not the only thing that's important. Or a score that's too low, it can disqualify you for the mortgage. So the score is important. Now, most of the time, the score is a factor, of your history, all the different things on your credit report that are going on. So the score is valuable. But the score is not the only thing that's valuable. For instance, let's say you have a 700 credit score. You look online, you see what's the minimum FICO score for an FHA mortgage. And you notice that a lot of the websites out there are saying FHA mortgage minimum FICO score 580. And you're like, hey, no problem. I can qualify, no problem for this FHA mortgage. And so you just go out, start looking at homes, talk to the realtor, and you're ready to make an offer, but you haven't talked to a lender yet and got pre-approved. Maybe you run into an issue because FICO score is not the only thing on the credit report that's important. And I say that again, credit history is extremely important. All right, so now that we know the score is not the only thing that's valuable in credit history, let's learn about some things that are. So you're going to look at the length of your credit history, how long it's been reporting and such. Let's go to USDA loan, talk about that for a moment. That's a zero down financing loan, 100% financing, so zero down. USDA will want to have 24 months of reporting history on your credit report. So if you have no credit, you've just gotten established, maybe 5-6 months worth of credit reporting, that's going to be a little more difficult to obtain a USDA loan. They're going to look for 24 months of credit history. All right, so I want to talk about trade lines. What is a trade line on a credit report, and how does it affect you during your pre-approval process? So a trade line is a reporting line of credit. It could be from a auto loan, it could be from a credit card, it could be from a student loan, other personal loans, a mortgage. These are reporting trade lines that those companies report to the credit bureaus, and they have on your credit report. Now they're going to report them monthly, month in, month out. And as you make payments or charges on those cards, they're being reported. Your balance will be reported and your payment history. So if you carried a balance, if you paid it off, if you didn't have a balance, if it was paid on time. They're also going to report your late. If you have a 30-day late, a 60-day, a 90-day late. Typically after you have a line that's 90-day late, most of those companies will report that to a collection agency, and it's not cleaned up pretty fast. You're going to go into what's called collections on your credit report. So that would be a trade line in collections. Now, very important that you understand you have to have a minimum amount of trade lines in order to be approved for a mortgage. Right now, most loans are going to ask you for 2 trade lines. Those are opened trade lines that have been reporting. Okay, they're going to look at a minimum of 12 months reporting, and they're going to look at your last 2 years of history. So 12 months reporting and last 2 years of history. It's very important if you have these trade lines that you're using them responsibly. So right now, if you already have 2 trade lines open, make sure if you want to be approved for the mortgage that you're going to be using those trade lines. So let's say you have an auto loan. Obviously, the auto loan's reporting monthly as a balance. You're paying it on time. That's going to look good. Just don't be late on making that payment, or that's going to report as a late, and that could jam you up on an auto. Not an auto loan, but a mortgage. Secondly, for a credit card, You're going to look at the last 12 months of history on that credit card. Now, if you have a credit card open and you haven't used it one time in the last 12 months, so open but no purchases, no payments, that's not going to be usable as a trade line on a mortgage. So you're going to have to make sure you want to be able to use that on a mortgage as a trade line. You make sure you make some payment charges on it and make some payments on it. You're going to look at the last 12 months of history on that. So when you use it, pay it off. You don't need to carry a balance, so you could go to the store and buy something with that trade line, and you can pay that off before the month's over, so you have no interest bearing on that account. But you do have to have it has to be used, it has to be paid, it has to be paid on time. Okay, so at least 2 trade lines. If possible, you might have more than 2 trade lines. You might have 3 trade lines or 4 trade lines, but at the minimum, you're going to need to get 2. So let's imagine right now you're someone that doesn't have 2 trade lines. What do? Well, you need to open up a second trade line, a third trade line, or a first trade line if you don't have one, but you need to open that up. One way you could do that if you're not able to get qualified for a credit card is you could go to your bank, and this is a suggestion. You go to your bank and they could do a secured credit card for you. That's a card that you put money into an account for, and then basically what happens is they allow you to use that card, and you're securing the amount of money in the bank for that card. It's a good way to start if you don't have any trade lines right now. Important things to know on your trade lines, like your credit cards. Number 1, make sure you never use more than 30% of the available balance on it. So if you have a $1,000 limit, don't ever spend more than $300 at a time. Make sure it's always paid down to that 30% limit before the month's over. And if possible, just don't carry a balance. Use it and pay it off. They're going to look for responsible credit. If you have a $1,000 limit and you're using $1,000, that's going to have a very negative impact on your credit score. So don't do that. Make sure if you have credit cards right now that are maxed out, it's going to cost you when it comes to your mortgage. It could cost you not being able to get a mortgage, or it could just cost you in interest if you have a lower score than you need to. So what you should be doing right now is paying down that credit card down to that balance where it's going to help you, and that may be your first step to a mortgage, is actually getting control of your credit cards and paying them down. So remember the 30% ratio on that credit card. Don't ever use more than 30% of it as a revolving debt. Okay, and if possible, just don't use your credit cards as a revolving debt. Pay them off every month before it comes due. That would be the absolute best. Okay, if you're not there yet, make a goal to get them paid off. And that, like I said, that might be your first step to a mortgage, is getting a handle on your revolving credit if you have it. So another one is your auto loans. Obviously, an auto loan is a trade line. You want to make sure that you're never making a late payment on that auto loan. Always pay it on time. It'll report as an installment loan, which looks good for you as a revolving trade line with a lender to make sure that you're paying your bills on time, but just never make a late payment. Okay. Now, the amount of your auto loan, how much monthly you pay, obviously that will have quite an effect on the amount of a mortgage you can get. So the lower the auto loan payment, the more mortgage you can qualify for. A lot of people do have auto loans. A lot of people have higher balances on those auto loans of $400 to $500 a month. I can do another video about auto loans, but for today, let's just stick with trade lines. Auto loan payment looks good for a mortgage. Make sure you're always paying it on time. Just don't be late on that auto loan. Another thing you could do if you have a short credit history that's affecting you for a mortgage, and length of time, it just hasn't been open that long, is you could have, like, let's say you have a parent or a relative, like a brother, older than you, sister older than you, or maybe even younger than you, I'm not sure, but let's say they have trade lines that have been open for a significant period of time, and they're very responsible with paying them. So they have a good credit score, but they have good trade lines. You could ask that family member, relative, to add you on that trade line as a user. If they do that, you're going to now be able to have that trade line under your name. It's going to show up on your credit report. The history is going to show up on your credit report. It's going to be a positive effect on you. And that might be a good way for you to build some credit at the beginning here. Now, keep in mind, you can tell your relative you don't have to ever get a card or use a card yourself. You could just be put on their account. The card could be sent to them. They could store it, but it's maybe a good way for you to start building your credit. And that could be a suggestion that I could offer you as a way for you to start now building your credit towards home purchase and home ownership. All right, well, let's talk a little bit about credit inquiries. That's when you go out to maybe an auto dealership or a credit card company, and they've ran your credit to see if they'll approve you. The more inquiries you have in your credit report, the more it could impact your score. Now, I have a good friend named Steven. He works for a company that does credit counseling, credit repair. And he has told me, and I've researched it, that a credit inquiry can affect your score by as much as 5 points or more just for an inquiry, okay? So if you are on your credit report having inquiries, a substantial amount of them, you could be pulling down your score quite a bit. For instance, I've looked at reports recently that have had as many as 10, 15, 20 inquiries on them in the last 90 days. And people are like, hey, there's no way I've had that many people check on my credit. These are, consumers that have gone out to maybe look for auto loans and such. And that one dealership may have sent that out to 3, 4, 5 different lenders that ran that credit. And that's substantially impacting their score now. So it's very important to know for you how many inquiries you have on your credit report, and if you have a lot, how to remove those. Now, sometimes it's helpful to have a credit advisor remove that. So if you work with me and we have a lot of credit inquiries, we're probably going to ask a credit advisor to help us remove those so we can get that bumped up. So keep in mind, you want to take a look at that as you make your game plan for the highest credit score possible, because the highest credit score possible is going to reduce your interest and reduce your payment and save you the most amount of money. Okay, I'm just going to wrap this up now. Remember, because like I said, if you're looking behind me on the soccer field behind me, just like sports are a game, you need to understand the rules. Credit history, credit scores, it's a bit of a game. You need to understand the rules of the game and how to play. You need to have a good team backing you up, helping you understand the rules and helping you make the moves so that you can be the best you can be and play the best game possible. As a mortgage advisor, I'm here on the front lines with you to help understand, the rules of the game, help you understand how to get approved for the mortgage, and help get the best rates possible. Sometimes we need to bring in other players, other coaches, such as a credit advisor, to the game. And if that's the case, let's make that happen. But I wanted to shoot at this video just to help you understand some of those things that will help you be prepared for a mortgage. If you're already right where you need to be on your credit, that's amazing, awesome. If you need some help on it, not a problem either. That's what we're here for, and I'd love to help you. So I hope you enjoyed this video. If you did, please consider subscribing to my channel below. Consider sharing it with your friends. Give me a call if you need any help. And if you need any help at all with the mortgages or questions on loans, give me a call, SMS, or text me. Thanks. Have a good day, guys, and have a good week. Bye-bye.